Right now, as we analyze the markets on this Saturday, December 6, 2025, the trading floor is silent, but the numbers left on the board for BigBear.ai Holdings Inc., ticker BBAI, tell a story of significant friction. The stock closed the last active session at exactly 6.74 USD, marking a decline of 0.30 USD, or a downward shift of 4.26% for the day. While the markets are currently closed, that final red tick on the tape is not just a static figure. It is a footprint of the intense volatility occurring at the intersection of defense contracting and artificial intelligence. When you see a drop of over 4% in a single session, the immediate expectation from the retail crowd, perhaps watching their screens on the Robinhood app or checking their Fidelity mobile app, is that something fundamentally broke or that the AI hype is finally evaporating from the small cap sector. The common belief is that unless a company is NVIDIA, it is destined to bleed out in this high-interest environment. However, the reality of this price action is far more nuanced and arguably more interesting than a simple sell-off. The reality is that BigBear.ai is currently undergoing a massive structural transformation, specifically with its aggressive $250 million acquisition strategy. And what you are seeing on the chart is not necessarily a failure of the business, but the market digesting the sheer weight of new shares and new strategic directions. This gap between the expectation of a meme stock crash and the reality of a complex defense integration play is where the real analysis begins, and it forces us to look much closer at the order flow than the average headline reader ever would. If you were watching the Level 2 data stream on your Interactive Brokers platform or tracking the volume spikes on your SoFi Active Investing dashboard during Friday's session, you would have noticed that the selling pressure wasn't panic-driven, but rather methodical. A 4% drop on a Friday often signals risk-off behavior from swing traders who do not want to hold volatile assets over the weekend, especially when geopolitical news can shift wildly in 48 hours. BigBear.ai has always been a battleground stock. Investors using Schwab Intelligent Portfolios or similar automated tools often avoid these high beta names because they wreck the standard deviation models. But for the active trader, this volatility is the product. The stock opened the session already feeling the weight of the broader tech sector's hesitation, but the drift down to 6.74 USD suggests that the support levels around the $6 mark are being tested aggressively. This is crucial because in the world of technical analysis, the $6 region has acted as a psychological floor. When that floor is tested, the algorithms that run high-frequency trading strategies, whether they are institutional bots or retail traders using advanced features on the Fidelity trading platform, start to trigger limit orders. The decline of 30 cents might seem trivial to someone holding Apple stock or Tesla stock, where daily swings can encompass $5 or $10, but for a stock priced under $7, a 30-cent move is a significant percentage of market capitalization evaporating in hours. This price action is occurring against a backdrop of intense corporate maneuvering. The market is trying to figure out how to value the recent news of BigBear.ai acquiring Ask Sage, a generative AI platform specifically designed for the defense sector. The expectation was that this news would send the stock parabolic, similar to how NVIDIA stock reacts to a new chip announcement. Investors on social media forums and those chatting in investment help groups were likely predicting a double-digit percentage gain. But the reality, as reflected in that 6.74 USD, is that the market is worried about the cost of growth. There is a tension here. On one hand, you have a company securing its future in government tech. On the other hand, you have the immediate dilution and cash burn fears that haunt every small-cap growth stock. When you engage in online investing, particularly in the AI sector, you have to distinguish between the technology and the balance sheet. The drop to 6.74 USD is the market pricing in the execution risk. It is the market saying, we see your new acquisition, but we also see your recent revenue contraction, and we are going to punish the stock price until you prove you can monetize it. This creates a curiosity loop. Is this the bottom before the integration pays off, or is this the start of a slide back to the $5 range? Let's look deeper at the market mechanics impacting this specific ticker. When you invest online, whether through a simple interface like Robinhood fractional shares or a more robust setup like Fidelity brokerage accounts, you are part of a massive liquidity pool. On Friday, that pool dried up slightly on the buy side. The volume profile showed that while there were buyers stepping in at the lows, the aggressive hitting of the ask price was absent. This lack of upward momentum is often caused by institutional hesitation. We know that major players like Vanguard and BlackRock have positions in BigBear.ai, but they don't trade like day traders. They rebalance. If they decide the risk profile has shifted due to the recent authorization to increase the share count to 1 billion, a massive potential dilution event, they will trim positions. That trimming creates a ceiling that the stock struggles to break through. So when you look at your portfolio on SoFi Invest or check your balance on Interactive Brokers, and you see BBAI down 4.26%, you're seeing the result of a supply overhang. There is simply a lot of stock available, and without a fresh catalyst like a specific new contract award from the U.S. Army or the Air Force, the buyers are content to wait for lower prices. This brings us to the company itself, beyond the charts. It is essential to understand what you are actually owning if you hold this stock. BigBear.ai is not a consumer AI company. You won't find their product on the App Store next to ChatGPT. They operate in a sector often described as decision dominance. They build software that ingests massive amounts of complex data, supply chain logistics, battlefield movements, digital identity verifications, and uses AI to predict outcomes and recommend actions. Their acquisition of Pangiam and now Ask Sage cements them as a serious player in the vision AI space, which involves using computer vision to secure borders and airports. This is heavy, industrial-grade software. The business model relies on government contracts, which are incredibly lucrative but notoriously slow to finalize. This sluggishness is part of why the revenue dropped 20% in the recent quarter. The government pays, but they pay on their own schedule. This disconnect between the fast-paced expectations of a retail trader using the Robinhood cash management feature to instantly move funds and the slow-paced reality of federal procurement cycles is the root cause of the stock's frustrating chart. Investors want the speed of software. BigBear.ai has the timeline of a defense contractor. The recent authorization to increase the share count to 1 billion is a critical piece of this puzzle. To a novice browsing investing sites, this might sound like just legal paperwork. To a seasoned analyst, this is a war chest. It means the company is preparing to issue stock to buy more companies or raise cash. The market hates uncertainty, and the threat of these new shares flooding the market acts like a weight on the stock price. It explains why, despite having a record cash balance of over $450 million, the stock struggles to hold gains. The market is discounting the current share price because it anticipates future dilution. This is a classic sophisticated investor concern that often flies over the heads of those new to self-investing. While you might be focused on the cool AI tech, the hedge funds are focused on the capital structure. However, the contrarian take, the reality that might exceed expectations, is that BigBear.ai is positioning itself to be bought out or to become a prime contractor. The defense industry is desperate for modern software. Legacy players like Lockheed or Raytheon are great at hardware, but often struggle with the nimble software development that BBAI specializes in. By acquiring Ask Sage, BigBear.ai has effectively cornered a niche in secure generative AI. This is AI that can be used with classified data. That is a moat, a very wide, very expensive moat. If they can successfully integrate these tools and start announcing contract wins that utilize this new tech, the sentiment could flip overnight. The drop to 6.74 USD could look like a massive bear trap in hindsight. The institutional ownership, sitting at around 34%, suggests that the smart money is sticking around despite the volatility. They're not panic selling on a Friday afternoon, they are likely hedging. Now, I want to pause here and ask you a question about your own position. Comment below how many shares of BigBear.ai you currently hold. And more importantly, do you think the government will accelerate AI spending in 2026, or will budget cuts stall these contracts? I want to see what the sentiment is among real investors, not just what the Wall Street analysts are saying. Looking forward, the future outlook for BBAI is binary. It is tied to execution. The company has guided for revenue between $125 and $140 million for the full year. To hit the upper end of that, they need the fourth quarter to be strong. They need the government to sign the checks. If you're using Fidelity ETFs or Fidelity mutual funds, you might have exposure to this sector broadly, but holding the individual stock is a bet on specific management execution. The risks are obvious. They are burning cash to grow, and they have that massive authorization of new shares hanging over the head of the stock.